My name is Gerald Gayton. I'm your mortgage doctor, and I'll show you how to take the pain out of getting a mortgage. Today's question is all about mortgage insurance. What is mortgage insurance? Is mortgage insurance good? So we're going to talk about that today. To understand mortgage insurance, I think you really need to understand what happened with mortgages prior to mortgage insurance. Back at the turn of the century, 1900s, should I say, early 1900s, the only way you could get a mortgage was if it was an adjustable rate mortgage on a 1-year or 5-year balloon, which meant you had to refinance that loan or pay it off every 1 to 5 years. In addition to that, there were laws that said they couldn't lend over 50% of the value. So if you were buying a house for $100,000, you couldn't get a loan unless you had 50 to put up. So you can see that was very restrictive, and only the richest could really afford to get a mortgage. It was a tool of financial empowerment. FHA, and the history is fascinating, really helped to open the door for home ownership because the FHA bought in loans that would require what was considered absolutely insane down payments of 10%. So that meant that as opposed to having to wait to buy that same $100,000 house, you could put $10,000 as opposed to $50,000, and you could buy a home. You were in the game. Now, this was considered borderline insanity, so FHA came up with something that would enable them to protect them, I'm saying the lenders, to be protected, and that was mortgage insurance. And that simply meant that if you met our qualifying criteria, and you had some skin in the game, you gave us a down payment, that we would have insurers who would protect the lender to make that loan even though they weren't getting 50% equity right up front. So that if that loan went bad, that lender wouldn't be out in the cold. FHA had mortgage insurance, which would allow that lender to be compensated in some fashion, and it secured the lender and made them comfortable and willing to make loans to people with less than a 50% down payment. That's really where mortgage insurance came from. FHA did that. They did it very effectively. And what happens in most free enterprises, someone looked at it and said, hey, I can do this cheaper. I can do this better. I can do it faster. And that's where you had the birth of the private mortgage insurance industry. And this private mortgage insurance industry was really targeting a very small group of people, the most qualified borrowers, those who had the highest credit scores, the lowest debt. Those are the people that they wanted to insure. And they were willing not to do the 10% down, but to match that and in some cases do even less of a down payment. But it was only for those that met that very restrictive criteria. And that was the birth of the private mortgage insurance industry. When that happened, it absolutely exploded home ownership once again. People were able to afford more house, bigger homes, control bigger assets, and that meant that they made more money when they sold it. So mortgage insurance in its simplest form is protection to the lender. If you're not going to be putting down 20% or more of the loan, the lender wants some kind of protection that enables them to feel comfortable with writing a check today and knowing that if worst case situation or worst case scenario happens, they're going to have some method of recourse, which is mortgage insurance, which will protect their losses, pure and simple. Now, with most mortgage insurance, it's really on the loan until you get to an 80% loan to value. All right. So if you bought a house at $100,000, you owe $80,000 on that home today. You want to reach out to your lender and let them review it or walk you through the steps for how you can have your mortgage insurance reevaluated. Now, there are more guidelines surrounding what it takes to have it actually removed. I'm not going to get into that with this video because it can vary depending on your lender. And at the end of the day, your lender is the ultimate person who's going to make the determination to see if you met the guidelines. If you have, they're going to remove it. There's a federal law that requires that it be removed if you meet the guidelines. So first step is if you think you're at that level, reach out to your lender, get that process started. Removing mortgage insurance is in effect for just about all loans with the exception of FHA. FHA mortgage insurance, particularly if it's been put on, you've gotten an FHA loan in the last several years, it's for the lifetime of that loan. So the FHA mortgage insurance will only be removed when you either pay that loan off by refinancing it or selling it. This is Gerald Gayton, your mortgage doctor. I'll show you how to take the pain out of getting a mortgage. If you have more questions, send them to me. Subscribe to my channel. Until the next time.